Hey everybody, Economic Ninja here. I hope you are doing good. I want to give you guys a word of encouragement, and I want to give you, I'm just going to not beat around the bush and get straight to it. Gold is going to crash. And I know there are a lot of people that have been buying gold to prepare for hard times economically. I want to talk you through what is going on, give you a word of encouragement, tell you you're not alone if you're feeling scared, because a lot of people, and I'll give an example, a lot of people that I work with have literally just watched their 401ks drop 25% in value uh, since the first of the year. And there's a lot of fear on the markets. There's a lot of people that are converting those 401ks now to gold, only to find gold going down. And I believe it's going to get worse. And we'll explain it. I've been talking about this actually for quite some time, telling you this was going to happen. The really cool thing is there's a big difference between the paper price of gold, and those are shares of gold, which I'm going to be honest with you are literally just fake promises. And you're going to find out one day, but dating all the way back to when JP Morgan tried to talk his father into leveraging the gold bars they had on storage, where people would leave them at the bank. And he said, hey, why don't we lease those out? And JP Morgan's dad was completely against it. But when he died, JP Morgan went and started literally loaning out shares of that gold, even though he knew it wasn't his. But he said, hey, there's only about 10% of the people always ever come and get it, so we'll do that. In comes fractional reserve banking. I'm just breezing over that, but I want to tell you honestly, it's one thing to prepare for a famine, right? You're preparing with food and all kinds of things because you know that inflation's coming. There's going to be hard times. You're not necessarily going to want to be out and about in the streets, right? It's another thing to be preparing financially to be able to go and crush it, right? One way is people are selling off their real estate or some of their real estate holdings and they're paying off debt. Another way is they're buying gold, things like that, and they're seeing it crash. Now, if you were not an investor in like a real let's say broad investor in 2006 to 2009, you wouldn't know this. And the reason why I say a broad investor, to me, an investor that invests in multiple things. I was invested back then in oil wells, like through limited liability companies, partnerships. I was invested in stocks. I was invested in real estate. And I then became invested in gold right after the crash, right? And I started, obviously, before I started buying precious metals, I studied the charts. And what I found was that when the stock market started to slip in 2007 and kept trending lower and lower, and I'm going to repeat myself a little bit just for people that are new. Sorry if you guys have heard this from me 10 times before. What happened was gold and silver started to sell off, precious metals. And the reason why is because hedge funds and institutions were selling off their insurance, right? Wealthy people know that you always keep a certain percentage of your wealth in gold for emergencies, right? Well, the problem is gold and silver are usually the last to act during a crisis, like a inflationary spiral or a stock market crash, right? And 2008 is not, it was totally like this. It was normal. As stocks started to sell off, fund managers were getting margin called, they were getting nervous, they were moving into dollars, they were trying to raise cash to save their portfolios. And so one of the things that they would sell is their insurance, their gold and silver. But the problem was most people, in the modern times do not have physical precious metals. And it's evident in what we've just seen in the last couple of years. And I'll get into that in a second. What they did was they would buy paper shares, right, of GLD or SLV, and then they would sell them. And this would have downward pressure on the price. So as the stock market trended lower from 2007 through 2008, we saw we saw stimulus checks come out, we saw Bear Stearns crash, and then ultimately Lehman Brothers crash and go bye-bye. Paper, gold, and silver sold off. However, during that amount of time, people were trying to scoop up deals left and right. And what they were doing is they were running down to their local coin stores or online, or even taking delivery from larger institutions were taking physical delivery of precious metals during that time because of so much uncertainty. And what happened was the precious metals, the physical price, the premium that sits over the spot price, right? You always see the price of gold being on the ticker of CNBC, right? That's the spot price. That exploded, the premiums, right? And so when silver, and I'll give you an example, from 2007 to October of 2008, right, a month after Lehman Brothers crash, went from around $17 to $19, and I don't have a chart in front of me or anything like that, going off of memory. You guys can check the chart yourself. And as a matter of fact, put it in the comment section. What was the high of silver in like 2007, 2008? want to say it was like $17 to $19. It got all the way down to, I believe, $9, right? And then it bottomed. And it bottomed well before the crash of the stock market bottomed. The reason why is because the Federal Reserve started printing money like crazy. And you're seeing literally the similarities right now. And there's so many people that go, this is nothing like 2008. I'm like, you are absolutely, seriously mistaken if you have no concept that this is exactly like 2008. Is it going to be bigger than 2008? Yes. Is the crash going to be harder? Yes. But the emotions behind it, the human fundamentals, because humans are what cause booms and busts. It's all emotion. That's what you got to get into your head, right? Are identical. Remember, guys, it's a famous passage that says there is nothing new under the sun. The sun rises and the sun sets. The point being of that phrase is that everything converts. History always repeats itself. This whole crap about it oftentimes rhymes. You just don't have a big enough view of history. I'm not joking. The farther back in history that you can look back means, and understand, means the farther into the future you can predict things, right? And so many humans get caught up in the minutia of like, well, what's happening this month? Well, I couldn't tell you. I could tell you the long term. And humans try and make other humans feel stupid, like, well, even a broken clock's, right twice. You're absolutely right. That's like the dumbest thing I've ever heard. It's like, insurance companies saying you're more likely to get in an accident within 25 miles of your house. Okay, smart guys, glad you went to college. How often are you like past 25 miles outside of your house? Like very rare. So yeah, I went to statistics too. Statistics. Who said that? Put it in the comment section below. So my point being is that gold is going to continue to trend down. The reason why, what was really gnarly this time is, interest rates were rising up between 2004 and 2006 back then, right? And gold and silver were catching a bid and they were rising, but then they started to come down. Why? Because the Federal Reserve stopped raising rates and the stock market started to sell off. This time is very different, I will tell you in this, because it's a currency collapse, not a stock market crash, right? So what's happening is the dollar is losing value, along with all the other currencies around the world. The dollar is just the best smelling turd in the punch bowl. Sorry, the ninja's brohawk's bugging him in the camera. The reason is that they need to stabilize it, right? So they're going to keep raising rates. Well, we all know they can't raise rates for very much longer. It's going to break the system. As a matter of fact, I got to be honest with you, one thing I was blown away about, I knew mortgage rates were going to go up when I said it in December, right? Because the Fed announced, hey, we're raising rates come the spring. I said, all right, here we go. Mortgage rates are going to go up. I had no clue how fast. As a matter of fact, I was calling 6% by July. I mean, this is happening so fast. It's just blowing my mind. At this rate, with this Fed raise that they should be doing tomorrow, because they've got to give this strong footing, mortgages will be over 7% by mid-July. And it's because so many people are running to the dollar right now. The dollar just broke a trend line that dates all the way back to 2002, busting in the 105, the Dixie, the DXY, which is just a basket of currencies. The dollar weighted to these, and it's heavily weighted against the dollar, or the euro. Well, congratulations, dollar, you're stronger than the euro. Cool. It's like, yeah, like I just won that race against all the guys that, have broken legs, but I'm awesome. No, you're not. Like you literally won and you could barely make it over the finish line yourself. That's literally what's happening. It's like me racing against, because I'm not the best runner, you could obviously tell. But it's like, come on, it's like I'm taking on a bunch of preschoolers. I'm like, I got it. I won. I'm the ringer. When really, come on, I'm the worst guy at running a race, right? So that's what the dollar is doing right now. And so what it's going to do is it's going to put downward pressure on the pricing of gold. Well, here's the problem. Since 2010, when I really started investing in precious metals, I've never seen a squeeze like this before on premiums. Never before. I've never seen this kind of volume. And so it's been just shoving the premiums through the roof, and it's been extended, just massive delays. Not only do you have supply chain and companies locking down and shutting down, all that kind of stuff, so they couldn't sell the product. But just the U.S. Mint numbers prove where they had just a blowout month this last month, and they're pushing up against huge records, right? People are wanting the physical. So that's the problem. And you're going, oh my gosh, I'm watching all this go away, until you go, well, here, let me try and sell a coin. Let me see how much it's going for on eBay, or let me go down to my local coin store, where you've got to be educated when you do that, because they're in the business to make money. So they're not going to offer you the most amount, but they're going to sell it for a ton, right? Literally a mint, pardon the expression. My point being is this. You're going to see a lot of crazy stuff in the next few months. I still believe we're going to have actually an upswing in things, because there's a point where the Fed is going to go, all right, let's pause. Let's just pause on interest rate hikes, all right? Because I think this one that's going to happen tomorrow or the next day, whatever it is going to, or maybe it's today. Actually, you're probably seeing it the day of this video. I don't even know when I'm going to post this video, but you're going to see some serious gyrations in the market. And when housing starts to sell off, and you see all those Airbnb properties hitting the market, and you see all those dream homes that people bought like a few years ago they shouldn't have, and they still got a little bit of margin, of safety, to be able to sell and get out with the shirt on their backs, that knife's going to start falling real fast. And so it's going to seem like you made the wrong decision. But over the long term, gold has always been an excellent barometer of market conditions. And do me a favor, please put in the comment section if you think we're in a good spot right now, economically, right? And if I would have been teaching this video or putting this video out in real time back in 2008, let's say the spring of 2008, I was saying, don't worry, gold's going to keep going down, but there's going to be a day where it doesn't, and then it's going to be moonshot. Then I would have been told I was crazy then. Just like a lot of people would say I'm crazy now, but I was crazy when I bought real estate in 01. I was crazy when I bought Bitcoin at 500. I'm always crazy. That's the good news. Ninja is always crazy. So with that being said, you should not take this as financial advice. I'm not a financial advisor. I'm just a dude with a bro hawk and a dream. A dream. And that dream, honestly, guys, all joking aside, is to lead an army of human beings that are going to absolutely crush it in this, right? So what is one thing you can do? A lot of people, they FOMO in. Don't do that. I've learned that lesson the hard way. Dollar cost average in. You don't got to go big. I'll give you an example. I have a buy order in for physical gold at $1,800, which I'm sure we'll hit it tomorrow. It might even be lower than that. Am I going to stress that it's lower by 25 or 50 bucks, maybe even 100? No. What am I going to do? I'm going to buy more. And why can I buy more? It's not because I'm filthy rich. It's because I'm not spending all my money at the 1,800 mark, right? Because the facts are you're never going to be able to hit the highs or the lows, okay? But you want to be prepared, and you want your finances to be prepared. And I hear this a lot. If you don't hold it, you don't own it. I completely agree, but some of us are in different situations, and it's not like I'm going to go and put $1 million in gold sitting at my house. I'm just not going to do that. Sorry. I'm not going to do that. I've got mine strategically, obviously all over the place. And one of them is a company that I own that we buy gold and we store it for protection for this crash. All right. I keep a treasury, and you know what's crazy? I'm not the only one. Elon Musk announced it, 2 Januaries ago, or was it last January? I don't remember. Time's flying fast. That they're actually buying paper shares of gold, but actual physical gold as well, along with Bitcoin. They're buying Bitcoin, and I'm sure tons of people praised it when Bitcoin exploded because of that announcement. But what's funny is that now that Bitcoin's dropping, and it's going to keep going down. I've been telling you guys this: as the stock market drops, Bitcoin's going to drop. And I haven't sold one Bitcoin, but I will be buying more between the $20,000 and $12,000 mark. That's what I'm going to be doing. I'm going to be accumulating, right? Because this isn't forever. And I believe we're going to have an upswing, a reprieve from this crash, this mini crash that's happening right now, because the Fed's going to pivot. They're going to halt. They're going to hold off on raising for a little bit of time. And you're going to see fireworks. But here's the problem. To get to that point for the Fed to go, let's hold off on raising rates, that means there's got to be a ton of pain in the market. And I'm telling you, you're going to see it. It's going to be like fireworks. But with that being said, you got to look at all the opportunities too. So that's what I'm doing. I'm holding on to gold for the time where the dollar fully collapses, which I believe comes very soon. I'd be shocked if we were a year from now, because the Federal Reserve has always said they're fednow.gov. You just go there and they go, hey, we're issuing the digital currency. I did a video on that by the second quarter of next year. That means if they're issuing that and they're going to start phasing out cash, it means it's going to have to get pretty gnarly, all right? So I want you guys to be thinking about that, how big of a deal this is, and really where to put your money. Now, a lot of people too, they go, hey, I can't afford gold. Well, then go buy a silver coin. Silver is like gold on steroids, quite frankly. When gold goes up because of problems, silver really goes up. But if gold goes down, silver really goes down on a percentage basis. Do I like silver more than gold? I do, because of an amazing story. Tons of amazing stories. And the facts that there are more patents tied to silver than any other metal on Earth. So the use case is immense, and they are pulling less and less out of the ground. Okay, but another thing too is like people buy stocks and all this kind of stuff, and then I've got like those links. I have one company that I use, and I vault, and I mean you don't have to put. I've got 2 links to companies. You don't even have to put $100, $1,000, $1,800. I mean, you could literally start an account with like $20. And yeah, it's tied to physical metal in a vault. And so, I mean, I don't. There's not a lot of excuses out there, but I will stay. I will keep it with this. Keep storing food. That's the number one thing. All right, get your house in order. Then we'll talk about your financial house. And if you've got a ton of debt, especially credit card debt, don't be going out and running out and buying gold. I mean, get the credit card debt. That's a noose around your neck. It really is, and that's going to hold you back a lot from a lot of opportunities. I want you guys to get out of debt. That's if you have a mortgage, I get it. If you have a fixed car payment, and you can make the payments, okay, cool. But I mean, the variable rate loans in this economy, that's dangerous. You are playing with fire, because I've told you before, you're going to see over 20% mortgages in this next cycle. I believe it's going to happen within the next 2 years. I know it sounds crazy, but it's going to happen. Why? Because interest rates have to get above real inflation, not these lies the government's putting out. So, I mean, we're going to be knocking down 20%, percentile, here pretty soon. So I'm telling you, you're going to see it. And this is not going to be a Paul Volcker moment. Jerome Powell doesn't have the guts to be him. You're going to see the lenders of the world demand higher interest rates. And that's already what's happening, okay? The Fed's not raising the 10-year. The people that issue 10-year bonds, they're having to offer higher rates as the bonds fall in value, okay? So the yields go up as the bonds lose value. And you're going to see more of that this year. And I'm sorry I say it with a grin, because all I see is opportunity, and that's what I want you guys to see. That's why I know you guys are here. So thanks again for all the new subscribers. I know it's a super long video, but I hope you guys got something out of this, and I really appreciate you guys. I really, really appreciate you guys. With that being said, the Economic Ninja, out, baby.